Hey guys, and welcome back to the channel. Today we are going to be covering top 3 USA stocks to buy and hold forever in your portfolio. Now, of course, everybody has their own different risk strategy, and what stocks covered into those risks might not cover into what I think is my risk tolerance. Now, these are just opinionated, so before we start, this is not financial advice. This is kind of more like an entertainment and my educational purposes, and a chance to learn how real companies make real money. And everything that I learn, I try and bring back to you. So, past performance does not always guarantee future results, and investing involves risk, and you can lose money. But let's jump straight into it. So, in the screen, you can see right now is Main Street Capital. Now, if you do watch the news or you do watch a lot of other YouTubers, they do mention a lot about Main Street Capital. And this is one that's actually in my portfolio. This company is basically the financial backbone for America's lower middle market businesses. The companies are too big for a bank, especially for where loans when they need money to either start or for help during the run-in. But they're also too small for Wall Street's private equity. So this is where Main Street comes in. They provide flexible debt and equity financing to help businesses grow, buy out founders, recapitalize, or expand. This is what I love here is the relationship driven model. They're not chasing risky tech startups, they're funding real cash flow companies like manufacturing, services, industrials, like the backbone of the US economy. And because they're a business development company, they're legally required to pay out 90% of taxable income to shareholders. That's why Maine is famous for its monthly dividends. Now, let's try and break down some of these numbers. Well, Maine trades around $52.92 with a market cap of 4.9 billion. Now, the biggest highlight, as you can see, is the dividend yield at 7.69%, and it's also paid monthly. But where do we go deeper? Because high yield always comes at a risk. Now, that is true, especially with higher interest rates, increased borrowing costs for their portfolio companies. They've also got a credit risk, so if the company slows, defaults can rise. And of course, deal flow risk. Fewer acquisitions or buyout means slower growth. But why does this stock rally? Well, when the stock goes up, it normally means a few things. Investors crave stable income in uncertain markets. Maine has one of the strongest track records in the BDC space, and their underwriting is conservative. They don't chase hype. And especially with nowadays with the AI and all that, the AI risk is actually quite minimal. The business is human relationship driven, and AI can't replace trust between lenders and business owners. So why do I hold Maine for the possibility forever? Well, it's built on cash flow discipline and diversification. And this kind of company that quietly compounds wealth, including dividends, is something that you kind of want adding to each month in your portfolio because, especially with those dividends, they grow and grow and grow, and you can reinvest them straight back into your portfolio. And another one that is also in my portfolio, and it's Carnival Corporation. And you see here is a massive cruise liner cutting through the ocean. I think we all dream on being on a cruise ship with a pina colada in our hands, enjoying the sunshine. Well, unfortunately not, because we are in, well, especially me, in a nice, lovely, rainy UK. But let's get on to Carnival. Carnival is the largest cruise operator in the world, with brands like Carnival Cruise, Princess Cruises, Cunard, Holland America, and Seaburn, or a lot more. Their business model is quite simple, but in my eyes, very powerful. They fill ships, they sell experiences, and then generate recurring revenue. Now, cruises are one of the most profitable forms of travel because once the ship is built, the margins on food, drinks, excursions, and entertainment are quite huge. And even after the pandemic nearly sank the industry and Carnival nearly went bust, it has been rebuilding very fast. Now, Carnival trades at around $24.85 with a market cap of $34 billion. Now, they recently reinstated their dividend at 2.36%, which signals confidence from their management, and they even got to investment grade. But let's talk about the real story and why did they actually fall nearly 51% from 10 years performance, and they're even down 19% year to date. Well, the reason why they fell 10 years ago was the debt that they took on from COVID. Now they took on massive loans just to stay afloat, and paying that down is now the number one priority. Now, very much recently, a war has broken out, so oil prices directly impacted the crew's profitability in the short term and economic sensitivity. And because the travel is discretionary, well, basically, people only choose and when to travel, not basically to do it every single time and it's recurring. Recessions hit bookings, and also with the travel of the war, that's also another problem. When the war breaks out, loads of people do not want to travel. And of course, cruises do operate in waters nearby, so unfortunately, it took a hit. Now, the stock has rallied for a few different things. Now, in the past, it rallied due to record bookings across all brands, younger demographics choosing cruises over traditional holidays. Strong cash flow is returning as ships operated at full capacity. Now, of course, the AI risk is very much low, and AI may improve logistics, customer service, and route optimization, but it won't replace the core business. And now, this is why I'm going to hold it forever. Now, Carnival owns experiences. They're investing in private islands. They're doing a lot more than a lot of other cruise operators. And experiences are one of the last things humans will ever automate. And with the dividend yield reinstated and the debts getting lowered, I just feel like this is one of the best opportunities to hold a stock forever. And I think you all know where we're going with this one. Yes, that is right. It is Google, or Alphabet, the parent company of Google. Now on the screen you're seeing the Google website. We use Google pretty much every day. Now, Alphabet is a holding company with two major segments. We've got the Google side, which is search, YouTube, Android, Maps, Gmail, Cloud, etc. Other ones is like Waymo, which is automated taxi service, Verify, DeepMind, and more. Now, Google search alone dominates over 90% of global search traffic. YouTube is the second largest search engine in the world, which is quite scary to think that it actually started out as just being a video like maker thing for us to all make videos. Android powers billions of devices, and Alphabet isn't just a tech company, it's actually turning into a digital infrastructure. Now, of course, Google's market cap sits around $4.69 trillion. That is right, trillion, making it one of the most valuable companies on earth. Now, they do have a 0.23% dividend, signaling a shift towards rewarding long-term shareholders, which is good, especially if you hold it for the long term. Now, it might seem small, but it will add up when shares go up and up. But even giants like Google face risks. Now, at the minute, they are dealing with a lot of lawsuits in the US and EU with antitrust. They're also doing slower ad spending during the economic uncertainty. And they've got big AI competition from Microsoft, OpenAI, and Meta. Hence why you can see the trend about AI today. Now, why does the stock rally? And why is it up by 5 years by 248%, year to date 22%, and even 10 years nearly 1,000%? Well, the dominance in search and YouTube is one of the main reasons why Google just keeps on performing. The explosive growth in Google Cloud and AI integration across all its products, which is ironic because AI is both a threat and an opportunity. If Google leads, it wins big in the AI, but if it falls behind, its core business is at risk. But why would I hold this forever? Well, Alphabet reinvents itself every decade with search, mobile, cloud, AI. Few companies in history have adapted this as well, but not like Google, who do it, I think, on the best ever. Now, of course, Google isn't going to be, the miracle of defeating AI. It probably will integrate it very well, and I think Google is going to be one of the stocks that are going to come out of this very well indeed. So those are the three US stocks built, for my opinion, a long haul investor. Main Street Capital with income and stability, Carnival Corporation with travel and experience megatrend, and of course Google or Alphabet Innovation and AI Leadership. Now, of course, if you enjoyed this free stock deep dive, then make sure to follow Weekly Mouse Investor for portfolio updates. And also, if you haven't subscribed or you haven't liked this video already, then of course go and do so with the links down below and click on the nice little shiny button where it says subscribe. But thank you for watching and keep learning, and I'll see you on the next one. Goodbye.